Hello, good afternoon, everyone. I'd like to welcome you to today's webinar, P3s and COVID-19, Impacts, Trends, and Perspectives. Today's webinar is sponsored by the Glucuho Facilities and Operations Committee. My name is Jeremy Alexander. I'm the Glucuho Technology Coordinator, and I'm hosted at Eastern Illinois University. I'll serve as the webinar moderator for today. Before we begin the webinar, I'd like to do a few housekeeping things with you to maximize your learning from this session. To ask questions, I recommend that you ask the Q and answer section down at the bottom of your screens. The presenter will try to respond to you as quickly as possible, but we want to ensure that there is enough time to get through all of the materials. Should you have any problems, please type in any technical problems, please type in the chat box and I'll work to assist you as quickly as possible as well. At the end of the presentation today, the audio and presentation will be available on the Glucuho website, glucuho.org, under Webinar Archives resource for your future reference. We encourage you to share this resource with your colleagues who are unable to attend and anticipate that this will go live as early as Friday. I'll hand it over to Greg from our Facilities Operations Committee to get us started with the webinar today.
Thanks, Jeremy. On behalf of the Glucuho Facilities and Operations Committee, welcome to today's webinar, COVID-19 and P3s, Impacts, Trends, and Perspectives. My name is Gregory Whitmore. I serve as the Facilities and Operations Committee Chair within Glucuho, as well as the Senior Associate Director of Occupancy and Administration within Housing and Residence Life at the University of Chicago. We appreciate you joining us today and hope you will find today's opportunity informative and leave with new knowledge that you can take back to your own institution. I'm pleased to welcome Ryan Jensen, Director at Brailsford Dunlavey, a P3 planning, development, and management firm based in Chicago, who will share information his firm has gathered. We will also hear from Susan Teggatz, Director of Campus Housing at the University of Illinois, Chicago, who will share more about her campus's recent P3 project and how it has held up during the pandemic. Without further ado, please join me in welcoming Ryan and Susan.
Thanks, Greg and Jeremy, and thank you everyone for joining us this afternoon. We're looking forward to a conversation and good discussion here at the end. Like Greg said, really the focus today is to discuss our perspective on state of the P3 sector related to higher education, a little bit of some of our observations and potential impacts related to COVID. Obviously, it's been an interesting year for all of us, and we have some thoughts as far as where we see the industry going as a reaction really to COVID and some trends we're seeing as a result of that. And then really want to devote kind of the last half of the just again, if there's any questions, chat along the way, feel free to put it in the chat box and we'll try to respond to them as we go along or just weave it into the end of the discussion. So a little bit about B&D. I think one edit I'd make to what Greg said at the beginning was P3 planning and advisory firm. We're just a higher ed planning advisory firm. We happen to have a focus area on P3s as a result to a lot of interest and desire from our clients to look at P3 as a potential option. But we're in no way involved in deals. We simply advise our clients on really the best solution for their individual campus and project. So you can see from the map, we're a national firm, 7 offices. I'm located in Chicago, been with the firm over 10 years. A lot of higher ed projects, again, not just student housing and really agnostic to P3 or not P3. We'll get into that a little bit later as well. That being said, again, P3 has been something we have seen as a very interest to the industry. As you know, a lot of drivers are leading a lot of clients to go P3, and we'll get into some of those reasons we're seeing in a little bit here. And so in response to that, we've kind of developed what we call Center of Industry Knowledge for the P3 space, higher ed P3 space. And our website, you can check it out, p3resourcecenter.com, has a lot of data, a lot of articles, reference materials you may find interesting that talk about a broad range of topics from why to go P3 and energy P3s, innovation districts, a variety of different product types that we're involved in beyond just housing. and as well as articles written by some of our industry partners, such as developers or underwriters or architects and managers as well of housing P3 projects. So before we jump into it, I wanted to start off, again, been a very interesting year, and I think has changed a lot of people's perspectives as far as, P3s and, the future of this on higher ed campuses. So I'm just curious from the audience perspective, how has COVID-19 changed your perspective on P3s, favorably, unfavorably, unchanged, or haven't thought about it? Certainly, you've had a lot of other things on your mind, as all of us have. So curious if everyone can respond to this poll question. Greg, I don't know if I am seeing the responses here, or did I do that correctly? Real quick. There we go. Okay. So it looks like the majority of people are saying unchanged, which is interesting and good to see. And then a lot of people saying haven't thought about it, which is definitely understandable as well. Some less favorably, maybe as a result of some of their own experiences with P3 projects, which we'll get into that in a little bit as well, especially students' perspective. So interesting. I thought it'd be a good place to start before we get into a little more of what we're seeing in the industry. So jumping right in, again, to some of the kind of the background of P3s and some of the data we've been collecting on the higher ed P3 space. Just before we kind of get into this, I think it's always helpful to just kind of outline, what is a P3, a little the context, so how we define it and, how the really industry defines it. Cooperative arrangements between two or more public and private entities, typically longer term agreements. Really, the history is primarily focused on infrastructure, horizontal infrastructure in a lot of cases. And Europe is really kind of at the forefront of a lot of these P3 developments, but there's been an expansion certainly into the US and more focus on what we call social infrastructure. So student housing we're talking about obviously today, but other things such as even recreation centers or student centers or mixed use development, food service projects and the like. So what type of projects? Again, it can cover a lot of different asset types. Student housing we're focused on today. I think an important thing we're going to touch on is that we're seeing more of these P3 projects looking at mix of uses, kind of bundling of different asset types as a way to deliver not only housing, but potentially academics, retail, other, whole host of other asset types on college campuses, really for kind of some more efficiencies and to maximize the development impact on a campus. When we talk about P3, again, we're kind of focused on these 5 components, which you'll see a lot, or you may be familiar with. The acronym DBFOM is most commonly referred to design, build, finance, operate, maintain, but really can be any combination of these. Doesn't have to be all 5. There's a lot of projects that the school ends up staying on to manage and operate. Or conversely, sometimes bringing in a manager operator for something that they built and financed themselves. So just, I think, helpful context of what we mean when we say P3. And then, why? I think, again, there's a lot of reasons here. And I think some of this is shifting and going to shift. And we'll get into that a little bit later as a result of COVID and where higher ed is going to, how higher ed may respond and change in the coming years. But I think a lot of the underlying drivers are still valid and reasonable and relevant for a lot of our clients, is what we're hearing. Faster delivery certainly is a big driver. The debt capacity, utilizing someone else's balance sheet for a project, the development management expertise in some cases, economies of scale, efficiencies, utilizing some development expertise and someone that manages and develops projects across the country, which Susan will touch on a little bit in her remarks. What are the options? There's a range of options available. There's no one size fits all. We always say to our clients, really kind of the continuum we're looking at here is, and these are kind of like 5 buckets, but there's even a range of different options within these. Kind of, if you look at this, you get further to the right, that's something that is further removed from an institution. To the left is obviously the traditional way of self-financing, owning, operating, maintaining, completely under the university's control. And then, the range of options in between, and our kind of goal is always trying to help them choose what makes the most sense, given what the school is trying to achieve with the project. So a little bit of the kind of summary of the landscape and some of the data. As I kind of mentioned up front, we started this P3 Resource Center. And as a part of that, we've been doing a state of the industry over the past, I believe we started in 2014. So we've been collecting data on the number of deals, types of deals, where deals are occurring, who's pursuing these deals as far as the types of institution. I think what's interesting is, you can kind of see from this chart, is that been fairly consistent 2014 to 2019 between 20 to lower 30s in number of deals on campus that closed. This is deals that actually closed, and the size of deals. You can see in 2020 that number dropped off very significantly. A lot of deals delayed, potentially canceled. We think that a lot of them will come back, but obviously a lot of schools reevaluating the need for capital projects, and really where they're going to end up post-COVID. So there's just a lot of uncertainty there. As far as the types of institutions, what I think has been pretty consistent there is primarily 4-year publics, a lot less of the 2-year publics. Privates still make up, on average, about a third of the deals we see in our inventory. And I think just, one other thing I wanted to mention as far as the data we're seeing, we'll get into the types of deals. The 501c3 tax-exempt bond issuance, those are still the most common. About 60% of the deals that were closed in 2019 were in that variety. I think some of the key drivers there are the low interest rate environment, and really, the driving the affordability for students. So having lower cost of capital, and also typically what goes along with it is no property taxes, allows more revenue to really either flow back to the university, or for rental rates to be more affordable for the students, which is obviously a big driver for the majority of our clients. So kind of some of the major trends, which I think some of these will be shifting a little bit, and we'll get into post-COVID, where do we see things going. But I think a lot of these are still relevant and important to kind of think about as far as where the industry is going. I'm not going to go through all these, but I think things to think about as you're potentially evaluating, reevaluating P3 projects on your campus. So the pre-development risks, I think this is a big thing a lot of people don't quite evaluate or understand before getting into it, is a lot of these projects actually don't reach financial close for various reasons. So people think it's it's you get a developer on board, and then it's going to happen, and you're going to come to agreement, and the project's going to be completed. But there's actually a lot of negotiations, a lot of upfront work that needs to be done, and so a lot of them actually don't get there. There's a very large percentage of projects that just don't end up closing. Maybe the university ends up doing it themselves, or they go another route, or cancel the project. So I think that's something that's very important to understand up front, is just doing that due diligence ahead of time is really a key factor in making sure you have a successful project that actually is completed. Shared governance. So this is, it's not just a complete handover to the private entity. There's a lot more sharing of management services. Again, Susan will talk about this a little bit from her experience, but it's a partnership again. So you got to think about it that way for it to be successful. I mentioned a little bit bundling, so including different asset types, becoming more of interest as a way to not just deliver housing, but deliver academic buildings, deliver food service, deliver retail. We're looking at hotels in some cases, office facilities. There's a lot of opportunity out there. It's got to make sense financially for both parties, but that's certainly a growing trend in the space. Okay, so how may COVID impact P3s? So a little bit of kind of our perspective as someone that's very involved in the space nationally and what we're seeing. I'm just going to go through a few kind of high level things of what we think may be some observations or trends and what we think may result as a reaction to COVID-19 and how it will infect the P3 space. So negative outlook cast over higher education. This is not new. I mean, there was a lot of negative press for all you out there that are obviously higher ed practitioners. You hear and you see it, doom and gloom. Even this was even pre-COVID. The demographic cliff, student debt crisis, unsustainable business model. I think what we would say to that is higher ed is shown to be actually pretty flexible and adaptable, and a lot of institutions finding ways to survive and adjust their business models. There was an interesting article in Chronicle Higher Ed about all these predictions about schools closing, and it really has not come to fruition because a lot of institutions have found ways to either come up with new business models, new academic programs, maybe consolidate some services or consolidate campuses, but having that flexibility and adaptability, and I think that also relates to the P3 space, looking at different types of partnerships we think will likely emerge, and there's a lot of examples out there of some creativity in the space that I think will just continue as a result of this. I mentioned the 501c3 deals earlier, which is really the most common model, at least recently, for a variety of reasons. However, something that's been exposed from COVID is challenges with these types of deals. In many ways, they've made COVID has made these less attractive to investors ultimately, because it's the bondholders who are investing in these projects specifically. So that is making it harder to finance these projects. As you can see here, this chart is from S&P, which rates these individual projects, these individual bond issuances. About a third of them were downgraded. And this was just a recent report from a couple weeks ago. Again, obviously impact of reduced occupancies, but they're seeing that as not necessarily just a short-term thing. It may have some repercussions for several years because of impact on debt service reserve and potential long-term ramifications of students, de-densification, and maybe students more likely live off campus or not come back to campus. So what do we expect as a result of that? Is more conservative underwriting for these projects, meaning occupancy assumptions, rental rates, the student demand, just being very tight on all of that, because it's going to be scrutinized even more heavily than in the past. On the flight to quality, so just kind of high level here, and it's somewhat related to last point, I think more heavy scrutiny on individual projects, meaning that institutions have to be very focused on why are we doing these projects? What's the plan? How does it really connect and tie to our institutional plan and vision for the future, and ways to grow enrollment and really support the institutional as a whole? Kind of the days of just going out there with a kind of fishing expedition is what we call them, of trying to see if there's any interest just as for a standalone project that's not tied to the institution. I think those are less common and maybe completely going away as a result of this, just because the investors aren't going for it, and you really have to kind of sell the value to the institution. And again, I think the second point there related to that is institutional support. So having more connection to the university, tie into your overall Res Life program, even showing that, we're really committed to this. There's some things that a lot more projects we're seeing, at least recently, occupancy guarantees, first fill agreements, even backstopping individual lease payments, we think will likely continue. Now that may not be the case for every campus, but in a lot of cases there's just that hesitancy and not necessarily as willing to invest in it as there was pre-COVID. So all that being said, still a hungry market. So the drivers are still there. And this chart is just showing, the pressures on higher ed from a funding standpoint, decreased state funding, coupled with continued deferred maintenance across capital projects, across physical infrastructure on college campuses. Those aren't going away. Now I know that there's stimulus money that will, the CARES Act, which will help, but kind of long term, seeing where state funding, we don't see that having a significant rebound. So I think there's a continued focus for schools to really kind of diversify their income streams and to look at some of these partnerships as a way to bring in some other revenue, which again is being shown in what we're seeing in the marketplace. Again, over 130 projects in the pipeline. These are projects that may not necessarily be out there as far as solicitation, but a lot of institutions waiting for the right timing or kind of reevaluating the right approach. And one other thing I guess I'll make on that point is, we have had, quite a few solicitations out in the market over the past year, even through these, unique times. And there's been a lot of interest from developers. So if the project is well-defined, again, tied to the mission, strategic plan of the institution, we've seen on average 9 responses, which is a great number. And that ultimately, what does that mean for our higher end clients is typically a better deal. You have more competition. You have the opportunity to kind of either drive down the cost of capital, construction costs, just get a better project. So that's good to see. Last observation, importance of having a partner more than a name, especially during these extraordinary times. I just show some articles again that we've been following, seen over the past 6 months or so. Some projects really been challenged. A lot of negative press from how some of the P3 partners have handled the COVID-19 outbreak on their campuses. And yeah, I'm sure a lot of you are familiar with these, but it's really exposed, maybe not necessarily the alignment of risk and reward and the agreements being tied to having everyone's kind of best interest at the forefront. So certainly some partners have been great to work with and have really stepped up with their institutional partners, but that hasn't always been the case. So I think just underscoring, making sure you're going into it with an understanding of these challenges that can occur if you don't think about it ahead of time and really have it within your agreements and solidly outlined before you get into this project. And this is kind of what we think about is making sure that your return and the risk allocation again is kind of at the optimal location. So just making sure you're clear and you have that understanding before you get in. Now, last thing I'll kind of leave you with before we'll turn it over to hear more of Susan's perspective is just I think these key ingredients for a successful P3 remain the same. It's a lot of questions that I think we're having our institutional clients ask themselves, why are we doing this project? Do we have the buy-in? Do we have the champion on campus? Is the market and demand supportive? So, do the students support this project or faculty, staff, or community? Are those risks and returns aligned well? And yeah, do we have the support? Do we have the knowledge to make sure that we can implement a successful project? So that was a lot from me, Susan. I'm gonna put the spotlight on you for a little bit here. Do you want to talk a little bit about your project? We have some of the stats up here as far as project on your campus that opened what about 18 months ago now?
Mm-hmm. Yes, thank you, Ryan. And welcome everybody. I'm glad to see so many people joining us this afternoon. And yes, I love talking about this building. It was just an amazing project that we were able to put together. Our partner said more than once that this was one of the first of its kind where we actually combined the academic and the residential space together. There have been projects across the nation that have retail in them. There have been projects that have small, classrooms and those types of things, but this has an actual fully functional classroom facility that operates integrated but separate of our residential space. We also have 1,500 feet of retail space, which is currently run by our College of Business students. It's a Starbucks. So everybody's excited about that, to have that in our building. And we did open fall of 2019. It was just a gorgeous day celebrating many years of planning that had gone into this building, and little did we know what our first year would hold. In addition to all of the learning that we were embarking upon in a project such as this, because this was the very first time UIC and campus housing had been involved in a P3. So a couple of our basic drivers for even considering this type of project were deferred maintenance and debt service. Our debt service on campus was much too high to be able to sustain any further building. And our deferred maintenance was also very high and impacting, we felt it was impacting the student experience on campus. Okay, I'll go to
So do you want to talk about how this has been different than other university delivered own projects that you've been involved in or familiar with?
I have a list because this is,
I know you do.
as a director, you don't get to build buildings very often, but I've been here at UIC during the time that we built 3 buildings, and that is some of the source of our debt services, having built 3 brand new buildings on our South Campus area. So this project was different than a typical university owned project in a variety of ways. And there was a project for an academic building that broke ground in November, and our project broke ground in January. And interestingly enough, the chancellor's office is at the 26th floor. So he could look down at our project and see the incredible amount of work that was being done and the speed that this project was moving. And he could look the other 2.5 blocks or 1.5 block away at the academic building that literally had fencing around this area where we had broke ground, and there was very little activity. So there was a very visual and real comparison to how the university operates a project compared to how it can operate when you're working with a private company. So some of the things, delivery of the building, it was early. We got our building early. I can tell you that there were 2 of the 3 buildings that we built on South Campus where we literally were trying to put things into the building, get things set at the last second or beyond the last second, because the project was not delivered on time, and it wasn't, there was no thought even of it being earlier. The construction schedule was amazing, again, on time and ahead of time. Speedy procurement. So when they needed to buy something, they were able to do it. The ability to problem solve quickly is another thing that I saw that just was notable, to have such a range of experts at the table working on this thing. The people running the project have done this many times before. So we may have been in a very unique position to have the benefit of this extraordinary partnership, but we had the people around the table had done this many times before. And the more times you do something, the better you get at it. And so I think we really did benefit from some real great experience in terms of the people that we were working with. So those are just some of the differences that I can note.
Yeah, no, those are great, and I can attest to one of those you mentioned as far as the quick transition. Well, kind of last minute, the university changed the site. So that was a big move, which is a big building, and it's a very prominent location, and it wasn't the original site, which was they had to shift, and they were able to get it done. So
Yes. So many stories. That and that is true. And I think that credit again to the people who are managing our development. I mean, when that shift happened, we had already what I call won these metrics. So we had done underground studies to check on a lot of stuff. So at the first site, all of those things were going to be able to happen. We had been working with collaborations on campus in terms of some of the resources on campus that wanted to be involved and were connected and involved, and just made a lot of progress. And all of a sudden it's like, no, it's going to be over here in lot 9. And that very next development meeting or project meeting, we were actually taking styrofoam things apart, trying to figure out what and how this building could look like, because a new site puts a whole different spin on many of the issues with the building. So that was, I forgot about that.
Oh yeah. I hear from a lot of res life professionals as far as, what is this, sometimes concerns about what does this mean from, my position or my staff, especially when the building's up and operational and there's, some shared services and kind of what, if you could talk about that a little bit, how is it changed? How is it materialized versus how you, kind of imagined before we got underway?
Yeah. In our careers, especially in housing, we don't get the opportunity to build buildings often. And for me, I was here at the university for the 3 buildings we built on South Campus. So I felt very lucky to have been part of that, even tangentially. I wasn't the person at this, I didn't have the big seat at the table. But for this project, I did. And so for me personally, in my position, this was a really great opportunity to be involved from the very first moment with a project such as this, especially something as unique as this. Some of the challenges of collaborating with an outside company can be far outweighed by what they bring to the table. So we, frequently will run into something of the company does it this way and we do it that way. And we come to the table and we have those conversations. Now, of course, we tried to have many of those conversations prior to the project even opening its doors, because we wanted to be sure that we were all aligned. But there have been, continued, I wouldn't say roadblocks at all, but continued lessons learned where we need to all stop and take a look at what we're doing. I think another reflection is, we really don't like to see ourselves in housing overall. We don't like to see ourselves from the business framework. But when you're working with a private company, the business framework is their primary framework. And so it does kind of force your hand to step back a little bit and let go maybe of some of those things that are things we hold on to that we need to do it a particular way. But when push comes to shove, it may not have a real business reason or rationale for us to continue doing that. So it's seeing firsthand how a company operates allows us to really be curious about how we do things and potentially adopt new practices that improve our own operations. I think agreements impact the decisions. So one of the things that I didn't foresee, because I didn't plan on having a pandemic, so it just kind of added a little side hustle to my job, was when it came time to decide to reduce our footprint in the spring semester of 2020, there was different decision making around our building than there was for some of the other buildings. So this project added another layer of complexity, and we made different decisions about it, or we had some decisions that were somewhat held because of the complexity of the project, and we went forward with that. Let's see, some of the ways that we've seen differences is just some of the ways they manage keys, managing to the bottom line. I think that has been the kind of the key theme that comes through. Mm-hmm. They don't have a chancellor who's willing to cover their deficit spending. So, when you're in university and you're in deficit spending, you write a letter to the chancellor. It's painful, many people start looking at your finances, but the bottom line is you continue to operate and your chancellor or the university covers whatever that deficit is. In the case of a private partnership, that company doesn't have a chancellor who's going to come around and say, well, yes, of course, housing is really important. You need to keep that on there. I think the other thing that's what it's meant for me is this company is just extremely knowledgeable about housing and residential life. So in addition to that business focus, they also have a great amount of knowledge of housing and residential life that they bring to the table. So that's made a lot of the work a lot easier because they do bring that to the table. I think, Ryan, one other thing has been, now I'm embedded with the academic side of the institution differently than I was. For a while, they thought I was in charge of the classrooms. And I think this still is a policy that I'm the only one who can say the classrooms can get used at night, which is weird because I am not in charge of any classrooms anywhere. But having that new, the classroom services, getting familiar with their schedule, understanding what that means, operating a building where this very large lobby is represents two entities, the classroom services and the residential experience. So that's internal. That's actually not just to the P3.
Yeah.
Yeah.
But yeah, it's relevant because it's kind of I highlighted we're seeing a lot more projects that are including other uses. So if you're housing, you may have other users or tenants in your building beyond just your students.
Mm-hmm.
So yeah, that's helpful. I guess one other kind of follow-up question related to that is, you kind of talked about how you view maybe you're viewing some of your individual projects, buildings differently. Any specific examples of things you're looking at changing, just based on your P3 partners, the way they do things?
Well, I think, that's a good question. I had something else in mind. I was thinking about where it kind of restricted us from making decisions. So in the summer, for instance, we are deciding to keep this building open based on our footprint, demand, occupancy, and what our summer business might be. That we don't have the choice. The decision to keep it open or not keep it open for the summer is impacted differently than like JST or MRH or TBH or some of my other buildings. Those I can make decisions differently about changing that. But this one, we have a financial obligation. So we're going to need to keep it open, whether it's logical, the most logical thing to do. I'm not going to say it's not logical. It makes sense. It's a great building. We're going to have classes there in the summer. So why not have people living there too? But it does present that additional layer as you try to make decisions.
Got it.
Yep.
Okay, so you may have touched on this just a little bit, but talk about how you and your partner navigated the interesting past year.
Yes, and this has been again, they have been just incredible to work with. And we have this saying, as with everything else about COVID, it's about driving the train while building the tracks. And we feel like we're driving that train, building tracks, and we don't have any expert train track builders. Like there is nobody who's a train track builder on their side or our side. So when COVID hit and when we started to, this additional journey for all of us, we found that, and we were engaged in constant communication. So we have a general manager who is on site. We also have our our folks from the national office who help us with things. And so that really was the constant communication because there was no playbook, there was no, these are our instructions for how we're doing this. It was trying to figure out what are we doing and can we do it? And then, okay, now how are we going to make that happen? So that required an intense amount of communication. And I'll talk about a few of those things through, like, for instance, we singled our doubles. That was a decision I made in a heartbeat for my other buildings. But that was a decision I had to talk to them about. And then they had to go through their hierarchy because there's several different groups that would have a say on this. And again, it all ties back to that financial impact. We knew we had to do it. We closed all of our buildings with community bathrooms, but not this building. So this building had a combination of suite bathrooms and community bathrooms. And for any of you who did isolation and quarantine housing on campus, you know, like community bathrooms are, depending on your health department, depending on who's making the calls, community bathrooms are just, no, I don't want to have a positive person on the hallway with the community bathroom because it means the whole hallway goes into quarantine. We went through that several rounds in the fall semester because we had these community bathrooms. And so we had to go work together to figure out what to do. And at one time I asked them to change their rate structure. Once again, they went back to their company. They made that agreement that they would do that if that was in fact something we had to try to do to get people more spread out than what we were based on that community bathroom. Thankfully, through the cases we had and the oversight from our public health contact tracing team that's internal to the university, we were able to do the analysis of, you know, we haven't been able to see one instance of transmission from those community bathrooms, so we're going to calm down. And we stopped putting them in quarantine every time we had a positive case on one of those hallways. So that was one area where we were making decisions, but then we had to, you know, slow it down a little bit. Yeah. But they were incredibly supportive because I asked them for a very crazy thing. I asked them to ignore their highest rate and allow us to move students around the building regardless of the rate. And we got the okay for that. And it was based on all of us having the same value of trying to crush COVID and work through that. We also found as we started with, we benefited from their vast network of experts from across the country. So they had other projects like ours, and they already were doing things to re-engineer, and they provided that information back to us. We may not have had all the ability to do that. Something that I was personally just jealous about is they were able to get a Lysol partnership. And so from their Lysol partnership, they were able to provide communications about, I mean, just saying that something is cleaned by Lysol kind of invokes this warm, fuzzy thought that, well, maybe that's a good thing because it's Lysol. So we were able to eventually join in that partnership, and I'm hoping to be able to roll that out next year. But because of their national presence, they were able to very quickly work through something like that. So yeah, they've been great partners working through all things COVID. I don't know what else to say.
No, that's great. I guess, you know, the last question is, you know, just if you have any other advice to housing professionals, either, you know, currently navigating or potentially thinking about pursuing a P3, you know, what are some things that maybe you didn't think of ahead of time that or maybe you wish you had thought of?
Well, I think a couple of things: scrutinize all agreements with a fine-tooth comb and then do it again. And I can remember some days during the planning process of going through large documents that had many things that I felt like I wasn't going to care about. And in fact, you really do care about them because it defines your relationship. And so you really need to focus on putting a lot of effort and time at that planning point, because those agreements are going to then be used going forward to help you, or if, you know, you make a mistake or don't get one in the way that it needs to be to provide you the best support possible, it'll have a negative effect. And with that comes a bit of trying to see the future, being able to identify the consequences of decisions. Like if we make this decision or this agreement here, this is how it's going to play out. I think that's another one. Weigh all your options, talk to others. I know I had many phone calls where I was like, okay, I know I talked to you about this before, but I need to ask these 3 more questions. And we did that across the campus. We split up. So I advise people to do what you need to for your campus, but I love how we created our relationship. They're responsible for the building and the maintenance and all of that. We have a marketing agreement with them where we do the residential life portion of it. So the RAs are ours, the staff who work in the building are ours, but the maintenance is all of theirs. And there's that learning point of how they approach things and how we approach things. Also, they have an incredible commitment to operating under our brand. So unless students know a lot about it, they might not know that the maintenance person in that building is not a UIC because they're branded with UIC campus housing. So I think that was another thing.
Okay.
I think that's probably my biggest pieces of advice.
Yeah, I mean, your point about evaluating the agreements is a good one, and yours obviously was tested very quickly with COVID, and so I think a lot of people had these clauses and force majeure and things like that hadn't really maybe paid as much attention to, but COVID was one of those unique events, and so things like that happen. So you gotta evaluate all those different situations.
Mm-hmm.
Great. Well, that's all the questions. I wanted to make sure that we open it up for questions from the audience. I know there was one about the slides. I'm definitely open to sharing those. I don't know the best way to do that, if that's through putting it on the GLGUHO website, or I'd be happy just to send an email out, but certainly fine with that. And again, we wanted to make sure that there was time at the end for questions, either for myself or Susan.
So the way that we could do questions, I know some people might be typing, but if you're comfortable, you can also raise your hand in the participant area, and we could allow you to ask your questions directly to Susan and Ryan. And while we're waiting for other people to formulate or think about their questions, I'd like to remind all attendees that today's session is recorded. It will be posted to the glguho.org website under webinar resources. I anticipate that it will go up as early as Friday afternoon, so you'll be able to share with colleagues or friends who weren't able to be with us this afternoon.
Nothing. Jeremy, you got any questions for us?
I can think of one more really important. Yeah, it's not a question, but it's really
Go ahead.
One more really important piece of your agreement with a P3 company. And that is how you determine eventually, I call it what you owe, how you determine what that agreement is in terms of occupancy. So you've heard like first fill, specific leasing numbers, those types of things. We were, I think, extremely fortunate in that we created an occupancy agreement that would average across our other like undergraduate housing on the East Campus. So when COVID hit and our buildings, the occupancy started dropping, we were still within the agreement because we were averaging against occupancy across all of our buildings, not the apartments, similar style of buildings. So I think that was something that was really important. And then the second thing that we did is for the summer, we took out that average occupancy agreement and we agreed to a specific dollar amount. Now, I'm sorry about that now, given that we're in COVID, because it's completely changed. what we're doing. Our business is going to be different this summer, and it was definitely very different last summer. But that helped protect our department from being required to require all students to live in that building over the summer. For instance, we're able to put whatever type of business works best into the building for the summer to be able to maximize how we're able to make money. So I think that was another really important thing, that you want to have some leverage in how you create that part of the agreement, because then it dictates, if you have to pay money if the building isn't full enough. So.
Yeah, I have another question. I'll put you on the spot again, Susan. Obviously, your building is, you have some community style. You have community baths, as you talked about. It's primarily double occupancy, even in the suites. You talked about the challenges related to de-densifying through COVID, but this is kind of the $1 million question, but any thoughts on kind of the student demand and that being a living environment moving forward that you would build again?
Oh, that's a great question, Ryan. And yes, I dearly hope that we're going to be building again. Right now, that doesn't seem to be, something that looks like it's right next on the horizon. The building continues to be in high demand. We fielded when we opened it, it's been in high demand. So there hasn't been a problem that we were worried about trying to get enough people to live in the building. We were easily able to fill it with demand. Right now, it's just our occupancy is so low. We're less than a third of the full population on campus, and that building also reflects that, less than a third of the full beds that we have.
Yeah, it's tough question.
Yeah, no, we're looking at admissions numbers, and we're hoping, that things are going to continue to turn around. We've reaped what we can from our returning group. With the numbers being so low, of course, that returning number is going to be low. It's kind of situated in the percentage of return that we've seen in past years of the number. But when you start out, 2/3 down, you're not going to be able to get to numbers you've had in the past. But we're hopeful that our incoming will help to start that turnaround in our occupancy, so we can get back on our feet where we need to be. Yep.
Well, that's wonderful. So we, I don't think, had any questions that had come in. So I'd like to just quickly thank both of you for joining us today and offering your insight and perspective. I think this was an excellent opportunity for our attendees to hear more about the trends and perspectives, as well as, Susan, your own experience with a project and kind of what it looks like on the ground, which is often very difficult to really understand unless you've been there. So thank you both for joining us today, and thank you to all of our attendees. So be on the lookout for a copy of this recording to be available after today. And we hope that you have found today's webinar both informative as well as knowledgeable, and you'll be bringing some good information back to your own campuses. Thank you so much, everyone, and have a wonderful day.
Yeah, appreciate it.
Thank you.
Thanks, everyone. Bye.
Take care.